What's going on, everyone? My name is Jeff, so let's discuss what we should all expect if this trade war does escalate and these trade tariffs could possibly take effect on Friday. Guys, I want to go over just exactly what we could all possibly see, what we should all kind of prepare for. Nobody knows exactly what is going to happen with stocks or the indexes. Even as far as world economy and foreign exchange, nobody knows exactly the outcome of this. So as I tune in and I learn more, I want to share that with you all. And of course, this is what we have a comment section for. We can all go down to the comments and talk about this and kind of read each other's comments. I know there is many different theories, okay? From where the clock is right now, we are actually about 28 hours away from when the new American trade tariffs are supposed to take effect on China. Just a couple of minutes ago, this is the most recent headline right here, is that Trump was saying that China broke the deal in trade talks. So this was a quote from Donald Trump as he was speaking in Florida. By the way, you see the tariffs we're doing because they broke the deal. They broke the deal. So they're flying in. The vice premier tomorrow is flying in. Good man, but they broke the deal. They can't do that, so they'll be paying. A lot of people think that Trump is using this just as a negotiation tactic. Of course, there's a very large amount of people that think these trade tariffs are 100% going to be taking effect on Friday, and to go ahead and get your portfolio prepared for that now. And then I would say the vast majority, myself included, kind of sits somewhere in between. We really have no idea. They could get a deal inked by tomorrow. Keep in mind too, guys, these trade tariffs could go into effect, and then maybe 24 hours later, they could come to an agreement. So you can take everything you know or everything you think you know about the stock market and throw it out the window right now, because the nature of this is very unpredictable. So guys, do me a favor, drop a thumbs up on this video if you're enjoying it, and make sure to subscribe to the channel if you have not done so already. So I'm going to break this up into a couple quick segments. Let's go over options, okay? Now, this is my personal opinion on options. Guys, if you're buying any calls right now, you probably want to be at least 3 months out. I would really limit the amount of calls you're buying. I would not get tons and tons of different contracts going on. I would try to have some level of focus and just have contracts on a couple of indexes or a couple premier stocks going into this trade war. And like I mentioned in the last video I made, guys, try to be at least a minimum of 3 months out and longer until we know the outcome of this entire situation. I would avoid any daily or weekly plays. However, if you're too overly leveraged in call options, you might want to start building up some put options, like I said, to counter some of the loss you may or may not see, or try to minimize your loss, okay? So if you can kind of get out of some short-term calls, take very minimal loss, and have that money sitting on the sidelines in cash, ready to spend, I think your odds would be better than that. And then building in your 3-month and longer positions, okay? Now let's talk about long-term investing. Of course, guys, you really do always need to have cash on the sidelines, and I encourage everybody to be in at least 25% cash at all times. Every portfolio you have, every portfolio you trade out of, I highly encourage you to always have somewhere between 15 and 25% in cash at all times. Because just in case these tariffs go into effect, we're going to get into the amount of damage we might potentially see to the indexes and stocks, and this would be a great time to buy on a really big dip, okay? Now the flip side of that is that the trade tariffs get lifted and China and the US come to an agreement, then obviously we will see some upside to the stocks, and I would not buy stocks into that run up, okay? And guys, if this little bump up due to a US and China trade agreement does happen, I would actually probably view that as somewhat artificial and no fundamental changes to any particular company or index. And at that point, I would probably look to buy some puts or start doing some short sales, okay? But like I said, as far as your long-term investments, just kind of hang tight. Make sure you have some cash ready to spend in case we get a sizable dip, because you might get a great opportunity like we got in October through December, to buy some really good companies and index funds at a great level of discount. Now let's briefly talk about short sales. Now guys, make sure you go back and watch my 3 stocks to short video for the month of May. I am absolutely kicking tail on 2 different put options that I bought for Rite Aid, okay? I actually got in the money on one set today, and I'm about $1.26 away from getting into the money on a set of options that expire in July. So looking really good there. But anyways, if you're going short on companies or you're playing very heavily on put options, is that if you do have some gains, guys, keep in mind, if these tariffs do get lifted and America and China do come to an agreement, the indexes could turn parabolic for a short period of time, and you could really get toasted on your short positions or your put options. So be very careful there. Do not forget about the other side of things. Now granted, if the tariffs go into effect and China and US escalate this trade war, then obviously we're going to start seeing some big fall off on all indexes and stocks, and you will pretty much have a free pathway, to covering on your short sales and selling your put options. Probably make a very nice sum of money if you have far more puts in short sales than you do long positions. So the real key here in all of this is balance, okay? The moderate investor, or just the simple long-term investor that has money on the sidelines, is actually taking the least amount of risk, okay? Where day and swing traders are taking far more risk, and what the outcome of this entire situation is. Now lastly, let's talk about duration. How long is this going to last? What can we kind of look for on the movement side of the indexes as a whole? Again, guys, this is not individual stocks. You're going to have to look at things broadly. Worst case scenario outcome, experts are saying that the S&P 500 could go into correction as much as 10% if the tariffs go into effect and US and China does not make a trade agreement, okay? And they're expecting the companies that will get hit the hardest are Boeing, Apple, and Caterpillar. Now that is kind of the professional opinion. In my personal opinion, I think it will get much worse than that. I think 15% drop on all indexes is probably a lot more realistic, and it could last maybe anywhere from 30 to 90 days, okay? Because one thing I have noticed about expert opinion, they're usually pretty decent at forecasting the upside, but they are very poor, unfortunately, at forecasting the downside, okay? So when I read 10, I usually think 15. If I see 20, I'm going to go ahead and say 30, okay? Whatever the professional or the expert opinion is, I'm usually going to tack on 5 or 10% because that's a lot more realistic. And then lastly, let's say US and China do come to a trade agreement and the tariffs are put behind us and we start moving forward. I've heard a lot of different opinions. I've heard estimates that the markets could run up 10 or 15%. I think to be a little bit more on the realistic side, guys, what you have to understand is that this kind of run up is no fundamental change to any particular company or index, and I think you could see safely between a 2 to 5% upside, okay? That's probably actually gonna correct in a short period of time. So like I said, keep in mind, if we do get a big bounce on the passing of trade tariffs, any US-China trade agreement, I feel if we get as high as a 5% boost on all of the indexes, I feel like that is probably going to be a little artificial and a little fake. And as we get to next quarter's earnings, I would actually anticipate that 5% to drop back off. So, however, the cool thing there is that's probably going to give you a very good opportunity to sell off. And again, if you're just a long-term investor, I would just hold through it and buy on any dips. But anyways, guys, that's all I got for the video. Make sure you go down to the comments, share your opinion on this trade war. I would really love to hear any and all opinions on that. Thank you as always for watching the video, and have an awesome day.
Let's go.